right, traders. This is Blake Morrow. You're listening to the Morning Edge webinar. Hey, listen. A couple of you guys fired back like political comments. Look, the comments that I made about Trump and Clinton, it has nothing to do with politics. It has to do with the markets and how they feel about certainty and uncertainty. That's it. Like I said, Trump is, and I don't care what Mark Cuban says actually at all. I'm really not a Mark Cuban fan. I really never have been actually, even when I lived in Dallas. The only thing I actually like him is how passionate he is about the Dallas Mavericks, his sports team, and the guy is a great market timer. I mean, I watched him sell Broadcast.com at the top, and I'm just like, when he sold Broadcast.com, I told my best friend and my mentor at that point, that was like 2001, we were trading, BRCM. That was Broadcast.com. That was the ticker symbol. I said, man, that dude just top ticked the market, and he did. He maybe not top tick, but man, he was damn close. And so I just want you all to know, I'm definitely not a Clinton supporter. I'm most definitely not a Trump supporter, and I really don't like Cuban at all. But I will tell you that, and I definitely don't like him after Shark Tank. It's like, guy drives me crazy in some of his comments. However, I'll tell you how the market feels is uncertainty. When you look at Hillary Clinton, the market will say, okay, I can see what I'm gonna get when I get her. If I get Trump, I don't know what I'm gonna get, and I don't know what that's gonna look like. And that uncertainty is what freaks out markets. It's not, it's the anti-Trump trade or anything like that. It is the uncertainty trade. Markets, and there's one thing I've learned in my entire career. Well, there's a lot of things, but there's one thing that for certain that I know that markets do not like uncertainty. That they do not like. Period. End of story. If you can just say, if you can take a stock and you can say, all right, we're going to have a bad first quarter, the market will go, oh, all right, we got a bad first quarter. We reprice and we move on. Bad first quarter, stock goes down, then we can reprice and move ahead. We can start looking ahead. When a company says, we're uncertain of our future, the stock will get creamed, not only in the first quarter, it'll get creamed in every other quarter moving forward until there is some sort of clarity. So when the market starts to feel that a Trump presidency is possible, and this is not before the election, when we start to feel that it is looking increasingly possible, the stock market will get extremely nervous, and you will start to see the market being sold as an event. Once Trump gets elected, the market will probably regroup at that point. Okay, and then there's then at that point in time, then the market will reevaluate based on policies and whatnot. But it's all about certainty and uncertainty, and I believe that Donald Trump is the uncertain candidate, and that is the one that's going to freak the markets out the most. If that makes any sense. Again, this is not a political argument. This is how the markets are, the viewpoint, if you will. Okay, I'm going to move on from the subject. I don't want to hear any political comments whatsoever, nor am I going to respond to anybody's, because again, it's not this guy sucks and this woman doesn't, or this woman sucks and this guy doesn't. It's nothing about that. It's just about how the market viewpoint. All right. Okay. So with that being said, we're going to move along. Let's go to our charts. Okay. So last night. We'll start off with the euro dollar. So last night on the Forex wrap, you'll see tonight the euro dollar looks like we can challenge 112.50, support at 111.20 and 111.50. So the euro dollar, this was yesterday afternoon, the euro dollar moved up to 112.47. So we're basically finding some resistance right now. Whoops, that's the S&P. Let's go over to the euro. Now the question is, where's the euro going to go from here? Well, you know, again, I have to say the same thing that I said yesterday. You know, the Fed kept rates unchanged, which we expected, but how much bang for your buck did, you know, dollar shorts get, especially if you're trading the euro dollar? It is it's one of those things that I look at the euro and I go, okay, well, we've had a bit of a recovery here, but how much of a recovery have we had, and how much can we really expect? We've seen a decent move. And matter of fact, if you go out to an hourly chart, we're probably closing in on 127% extension of this move right here. Okay, which we are at 127% extension, because I was looking at that last night. And if you take this move right here, we're at a 786 retracement. So you can see this fib confluence is really coming into play at the 112.50. Now I think it's possible that we make it a little higher. And this, if you take this trend line, and this trend line is not perfect by any stretch of the means. We could be here or we could be here. And the reason why we're here right there is because of this. Okay, that, okay. And so for us to make it up to right here seems possible, which will be, I'm going to write down 112.65, okay? Because we've already hit the 112.50. I just don't know if we're going to get much past that. So 112.65, that should be resistance today. Now we could make it up a little further. Depends on, I mean, we have some U.S. data. Also depends on equities. I'm really interested to see how equities respond today. Because if the equity markets really only have, you know, the equity markets really only have you know, one day of bullishness following the Fed staying on hold. I don't think that's going to be a bullish event for equities if we start to sell off this afternoon. And if that starts to happen, then there's the probability that we've seen, one of the relationships that we've seen, that the dollar starts gaining strength on risk aversion. So you know, again, I think it gets a little trickier up here as we get above 112.50 or close to that. Now, I still think that support is obviously very critical down here. I don't think we're going to hit that today. I really would doubt that. I think you know, if you're a buyer of the euro and you're selling the dollar, your better place to be on the long side is going to be down at 112. I mean, we got a bunch of spike highs here. You could see this intraday, the intraday bullish wedge that came through, like right through there. So I think any move down to 112 is going to be fairly well supported. So if you want to get on the long side, that's probably the place to do it. You know, here at 112. I think if you want to be on the short side of the euro, you want to be short up there. You know, like for me, I'm looking to short the euro up there. I think 112.50 is going to offer pretty good value to be on the short side. You know, maybe a little bit above it. I wouldn't mind if the euro like clipped new highs, you know, because the highs are basically at 12.50. So I'd like it to clip new highs and then basically brush through new highs, and then I'd short it. Okay, but 112 should offer support today for bulls. Okay, we're still in this range. We're threatening to go bearish, but we just kind of stay in the range. Now the pound's getting a nice recovery. All right, it was really do or die time yesterday, and so I have to say that the Fed has saved the pound. It really did. I mean, we were you know, you guys heard my analysis. It's like, listen, it's up to the FOMC whether we bounce off of 129 or we break it. That's all it was. All right, and so because the FOMC kept rates unchanged, we ended up bouncing. So this flag pattern never played out. So now what we're doing is we're approaching resistance, which is you know, the 131 level, which I think we wrote down 131 yesterday. So here we are. Now let's make the assumption this morning. Let's make the assumption that the cable breaks 131 and the euro, breaks 112.50 and gets up to 112.65 or whatever. Okay, so if that's the case, the 38% retracement. Now take a look at this. So I'm gonna I have to move this fib just a little bit more. Okay, there we go. So the 38% retracement is the spike low here. So 131.35, that to me looks like good resistance for the cable. It is a 38% retracement of this move matched up with a spike low. Okay, I'm going to get rid of that. We don't need that for right now. Okay, and that is going to be really important resistance. Now, obviously the cable has a lot of news streams that comes through it, so that can influence it. We are still in a bearish trend. I know, as much as you guys are going to believe that the pound is not bearish, it's still below 135. So I don't think we can get down to 129.40 today. I really don't. I think we'll probably get stopped up before that, maybe 130. And I'll just say 130. Yeah. I mean, any dip to 130. I think you're going to get people that were short the cable yesterday that may still be stuck short. They're going to be happy to get out at 130. So anybody who's too short the pound right now is going to be like, okay, we get down to 130, I'll take that. You know what I mean? Because you got to look at it from their point of view. If there are, as much as of a bad strategy as it is. Oh God, actually, let's talk about this for a second. So as much of and some of you in the chat room are going to laugh about this, but I'm not going to say any names. Believe it or not, some people will take trades just before a news event. Like just before a news event, you short the pound dollar before the FOMC. Right? Believe it or not, there are people that actually do that. And as crazy as I think it is, it's like, dude, the FOMC, somebody did that yesterday. And if you shorted the pound yesterday ahead of the FOMC because you thought that was the right trade to do, you're at this point in time, you're like, oh God, if it just gets back to 130, all right. So at this point in time, 130 is going to be support. Believe it or not, there was somebody that did that yesterday. So 129.40. Okay. 130 is support. And 129.40, obviously. But 130, I think if the cable gets back down to 130, anybody who's stuck short will be like, thank God it got, back to that. Okay, where else am I at? Okay, well, let's go over to the Swissy. So here's the dollar Swiss. Okay, so the dollar Swiss has come under pressure. I picked up a little bit of dollar Swiss yesterday. We actually bought and sold dollars quite a bit yesterday, and then I picked up some, and I got stop out of it. I had a little position going into Asia, but I put my stop below this trend line and got stopped out. You can see that yellow. Actually, it was down here. Sorry, wasn't down there. That was the analysis from yesterday. It was down here. And so when I got stopped out, I was like, okay, it was fine. It was, it was worth taking a pop shot at it just in case the dollar had a recovery rally. But we were buying. I think most of us were buying the Swissy and like the Canadian, and just like picking off a few pips here and there following yesterday's NFP or FOMC. But the Swissy broke lower, but again, we're still in process of building a base here. Here, let's get rid of these. I don't need that right now. I don't need that. This. Okay, so, and I don't need that. We need this. Okay, and we don't need that for now. we're obviously coming into some horizontal support. I don't know. Like we're at the 618 right now, but maybe a move down to the 786. I mean, you think about like the lows that we're forming. Nothing's really consistent down here. You know, there's no type of consistency other than we are making higher lows. So if we do make a higher low, it's going to be like right around here. So I'll say 96.10. I don't know if we're going to make it all the way down there, but you know, we might. Okay, resistance is going to be back at this trend line. Whoops. Resistance is going to be back at this trend line. I guess we did need that line. So any move back to 97 and a quarter, that's probably going to find some sellers. And we are still in a freaking range. God, it's like, you know, really one of the things that, for those of you that have been on this webinar for any extended period of time, like I'm talking years and have been listening to the Morning Edge, there's nothing more than I hate when my entire bias chart is like range bound. It's, you know, I love being in a bullish or bearish market when I can look at, you know, the dollar and say it is extremely bearish, or look at the dollar and say it is extremely bullish. I hate it being in a range environment, and we've been in such a range for, you know, the last year plus. It's challenging. It's challenging, you know, to establish any like longer term bias. You know, it is definitely annoying. All right, dollar yen. Let's go take a look at the dollar yen. All right, so the dollar yen. I'll tell you guys. You know, I was reading this Goldman report overnight, and I was, you know, they're extremely bullish yen. And then I was reading actually everything else that I've read is just extremely bullish yen. Meaning, there's nothing the BOJ can do. Dollar yen's going to 95 or below 100, really. Nothing the BOJ can do. You know, the FOMC is, you know, let down the market. Dollar yen, it's got to go down. Okay, I've heard that argument. It's not going down yet. And like I said, what I'm on the lookout for is I'm on the lookout for actually a big turn in the yen, whether it's 95 yen or whether it's above 102.50 or 103. I'm looking for the yen to actually start moving lower, regardless of what stocks do. Now, I don't know if that's the right trade right now. I need it to pop out of this channel for me to really believe that. But what we have seen is we've seen, you know, the yen not act particularly well when stocks come down, which I think is a very interesting change in correlations over the course of the last month. All right. And I don't know if that's going to stick, but I really, and you guys have known this ever since here. You've heard me say this. Ever since here, I've told you guys, look, I'm bearish yen. I'm bullish yen right now because I did expect it to go down, but I'm like, longer term, I expect the yen to do this. Longer term. That's been my viewpoint for the last year and a half. And you all have known that. You've heard me say that on, you know, probably once a week, if not 5 times a week for the last year and a half. I think the yen is a short. I just don't know if it's here or if it's here. But I know somewhere down here, I want to get short yen. And that's not just the dollar yen, you know. I'm talking Aussie yen, Euro yen, pound yen, you know, Canadian yen, yeah, you name it. I'm not going to discriminate. Well, maybe the pound yen. Maybe I would discriminate against the pound yen, but you know, or not the pound yen, New Zealand yen, because I don't like buying Kiwis, but that's me. But as far as yen goes, I really want to be on the short side of the yen. I just don't know if this is the right time just yet. But what I will tell you is, against most people's wishes overnight, the dollar yen is finding support. And 100 yen is major support, any which way you slice it. Whoops. So today, 100 is major support. Now, if for some reason we break through 100 yen, I think we all could agree at that point in time that the yen's going to get destroyed, or the yen pairs are going to fall. I do believe if we crack this blue line here, if we crack that blue line, then the argument that I'm trying to make with the yen, it's not happening yet. If we break that blue line, we're probably going to see 95 yen, my opinion. But damn thing's being resilient, right? Now, resistance today is right there. So I'm going to tell you that above 101, we're going to start getting some squeezing, because then you're going to get all those people that read the Goldman research last night. They're going to say, frickin' Goldman, damn it, they got me on the wrong side of the market again. Okay, so if we break 101, we're going to squeeze. Probably squeeze back to 101.50, something like that. What is this? Oh, let's get rid of that. That held us for a little bit, but frickin' Goldman. Goldman never gets me on the wrong side of the market, said no one. All right. Yeah. Let's see here. Where am I at? There's the dollar yen. All right. Let's go over to the dollar Canadian. Here's the dollar Canadian. Dollar Canadian crude oil just spiked up in a new high, so it's bringing the dollar Canadian down. One of my most frustrating trades I think that I've done over the last 48 hours is not staying short the New Zealand Canadian. Getting out of it here, being short here. God, it's frustrating. That false breakout above that, above those highs, and then that reversal. Look at that thing. That thing's coming unglued. The Canadian here, we're coming down towards we broke the 50% retracement, so the 618 should be at 130. We're right there, or we're getting there. So 130, and maybe we probe just, it's be 129.85. We'll probe just below that, of course, because we need to take the stops. The dollar Canadian is one of those currencies that it takes out round numbers by about 15 pips before it reverses almost every time. It's really good about doing that. It's one of the characteristics of the Canadian, for those of you that do not know the loonie. Resistance will be 131.25. And we are still in a range. In a big, fat, hairy range right now. All right. Oh, shoot. Look at the time. Damn, I'll be back in a few minutes. Don't go anywhere. I'm going to go get some more coffee. All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar. Watch equities here. Like I said, one thing that I think concerns me the most right now is how equities respond today. If we get less than a 24-hour bounce from today's or yesterday's actions from the Fed, we're coming right up to resistance too. This is the Dow futures. If we reverse today and we just give back everything, especially everything that we got from yesterday, it's not a positive sign. Just be a little careful. I'm just looking at some intraday action here of the of equities. Looking a little, you know, I mean, this is Dow futures, just so you guys can all see. You know, it's going to be kind of challenging if we come back and break through. Now this is about 50, roughly about 50 points in the Dow. If we come back and take out those levels and we start reaching places that we haven't seen since the Asian trade, it's not going to be a good thing. That means markets, again, I know I've said this before, but we see it every time a central bank meets now. The numbness that the markets have at these levels, following what should be construed as positive central bank activity. So, anyway, let's see. Where am I at? We are Kiwi. All right, so the Kiwi is setting up here as in my opinion, as a possible reversal. And Pauly had pointed out. I'm gonna delete a few things here. Okay, let's go drawing, remove lines for current. Okay, this is the daily chart in the Kiwi. I'm gonna redraw this stuff. Okay, something like this, right? Just so we're all on the same page. All right, so we got this channel, upward sloping channel. We've all, been watching the channel, shorting, as it reaches the upper end of this channel. Now we have this underside of this trend line. You can see right here that we've been rejecting. I mean, just consistently. The RBNZ met yesterday. Hold on. A little bit of dollar weakness seeping through the market. Okay. So we've seen a lot of well, we saw the central bank basically keep rates on hold. The market didn't respond because the RBNZ really didn't remove the idea that they may actually not cut, and so the market didn't take too kindly to that news. Now the Kiwi has come off here, and we are setting up a possible. I'm going to say possible because it's definitely too early to be thinking this way. But a possible head and shoulder pattern, if we can hold, this 7360 area, 7370 area. I'm going to write down 7370. Okay. Now, what's going to build the case is if we can break back below here. Let's move this. What's going to build the case here is if we come back and break, let's say 73 cents, right? So let me just make sure this is about, I don't want to copy the whole thing, but I'll use that. It's about right. So really, key support is going to be at 73 cents. And if that breaks, then then we have an opportunity really to get down to the neckline, which will be somewhere down here. Here, somewhere down here. That'll be like more of a neckline, somewhere in that neighborhood. Let's scoot that in a little. Okay. So 73 cents is going to be really important support today. It's still bearish while we were below this trend line here. While we remain below that trend line, it's still bearish. Okay? All right. Let's go to the Aussie. Now the Aussie on the flips on the other hand, the Aussie, doesn't look bad. Solid. Now the Aussies had a, nice rally here. Okay? And it's performing pretty well because the Aussie New Zealand looks strong. I mean, frankly. All right. So the Aussie is approaching really key shit. I'm almost gonna get short some Aussie up here. Hold on. Where are we at? I have to sell some. And I did. Excuse me really quick. Okay. So we're at the 786 retracement. We're also at triangle resistance. Personally, I don't believe the Aussie's going to break out to the upside here. So I just sold some. Now, this small position, I'll just add to it on a complete reversal. Like if we end up by the end of the day near our lows of the day. But we can make it up to 77 cents. This is an 88% retracement. So, and if you think about the downsloping trend line that comes through here, okay, you see, you take this downsloping trend line, it comes in somewhere around 77 cents. So whether we stop here or we make it all the way up to 77 cents, I think it's possible. That's going to be pretty key resistance. We are in a range. Okay. Now support for the Aussie dollar will be all the way back down at 76, because you can see right here on the hourly, right through there, it's going to be a real big support on the way down here. Let's get rid of this one. We don't need that for now. So zoom that out. Okay. Alrighty. Let's go over to the dollar index. So the dollar index, now keep in mind we're coming into some really key support. This is the big channel, right? This big channel support down here. So now we have to take this low, this spike low. This is not uncharted territory. We spend a lot of time down here near the support. We're at the 618 right now, but the 786 looks more doable. That's 786 retracement. This is where, if I was short the dollar, this is where I'd be targeting, right through here. So that comes in at, because I can't read it, I have to move this over a little bit. That comes in at 94, 87, 86, 94, 85. Okay. $94.85. Okay. Resistance, this is irrelevant now that we've passed through it. So resistance is going to be back at 95.60, which seems like a number we write down quite a bit around here. I'll leave that right there. Still in our range. The peso Now this peso, tell you what, this thing, we finally broke the uptrend line yesterday following the FOMC. We have to keep in mind that we're still above the breakout point. We're getting really overbought here. You can see we're getting overbought in the daily. So we're correcting the overboughtness. Okay. The resistance was spike high here, 1951 over here, 1944. So I'm just going to write down 1950, and I'll write down 19.44, 19.5000. That's support. Okay, all these spike highs up here. So it's a roundabout area. That's why it's such a thick trend line. It's still bullish while we're above that. All right. Now think about the characteristics of the U.S. dollar Mexican peso. Okay. Let's get rid of that for a second. But let's go here. Okay. You finally think, oh man, it's breaking down. Hits new highs. Oh man, we're breaking down here. Hits new highs. We're breaking down here. Hits new highs. We're breaking down again. We hit new highs. We're breaking down again. We hit new highs. Okay. Now we're breaking down again. What I'm going to say is be careful getting sucked in on the short side of this bad boy. Because every time you get sucked into the short side of this one, it rips back up again. The good news is if you're shorting it, it finally broke this pretty solid uptrend line, but we're still in breakout territory. All right, so resistance is at 1991. Beyond that, it's 1995, by the way. Why'd I put a dash in here? Okay. And 1995. Sorry. 1995. Oh, I removed it. It's right here. (127% extension of that last move. So I'll just leave that in there for right now. Okay. This is bullish. US dollar, Swedish krona, or Norwegian krona rather. So the US dollar, Norwegian krona, the Norges central bank kept rates on hold. Kind of dashed the idea that there's going to be more rate cuts. So the Norwegian krona is very strong right now. It's trying to break down, okay? And you got to watch this thing. And even if you don't want to trade the US dollar Norwegian krona, you trade the euro Norwegian krona. One of my colleagues at Forex Analytics is very, very, very bullish the Norwegian krona. If you don't know why, there's a good, he wrote, actually both a couple of my colleagues wrote let me get to it really quick. I'll get you guys the blog post so you can read about it. It's right here, and go to here's read the Norway Highway. This is a really good write-up from my colleagues over at Forex Analytics. I'll put the link in the chat box. Make sure you read that. Okay, and this Norwegian krona has the potential to really move higher. And like I said, even if you're not shorting the dollar, buying the Norwegian krona, even if you're trading a cross rate like the euro Norwegian krona. Like you look at this, actually we're breaking down today. You see it? Well, we're trying. We're getting right to the lows. It's a huge head and shoulder pattern. Huge. Okay. So read that blog when you get a chance. Uh, with that being said, let's go over to the Euro, US dollar, Norwegian krona. Let's take a look here. So the 127% extension of this move higher comes in at 805.69. So I'm going to write down 805.50. This is threatening to go bearish today. Of course, a lot of it depends on what happens. I mean, you see crude's bouncing. You know, a lot of this depends on what happens with crude and the dollar and whatnot. Resistance. Any move back up, well, actually, any move back up to 816. I don't want to write down 811. Yeah, any move back to 816. All right, let's take a look at the Swedish krona. So this Swedish krona dipped back into its range again. But man, if you look at this thing, man, it's not. I mean, there's a lot of support that comes through here. I mean, 847. I mean, it's holding up really, really well. It's hard to get too bearish this thing right now. I don't know if it's the right time to be bullish. Man, it's a hard life trying to be bearish the U.S. dollar Swedish krona. It's tough, you know. I think you have to play it off the support like that. Resistance is at 860. I think you kind of leave it alone for right now. The 861 is resistance. Okay. There you go. All right. Okay. Had to stretch a little bit there. And it's time. We got 5 minutes until news. Damn it. Man, this morning has gone by quickly. All right, I'll be back in a few minutes. Don't go anywhere.